So how do I protect my assets, my money
Mm-hmm.
from inflation? Well, I get into hard assets, and that's real estate.
Right.
Okay. Still a great time to buy real estate. But the question people should be asking is what kind of real estate and how do I get in?
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. So I have Kathleen Kramer with me today, and we have been chit-chatting, and we decided that she's going to actually introduce herself this morning. Now that's a first. Now, before I let her talk, so hold on, before I let her go, we're going to do a completely different format than we usually do for my regular listeners. I am going to let Kathleen Kramer give us the 5 disruptors she sees coming down the pike in 2022. I feel like this topic is so important for you guys to understand that all ships rise and fall on the tide. The economy is the thing that will be the underpinning to your financial success or falling on your nose in real estate investing. And so I really have Kathleen Kramer is amazing. She's grounded. She has a long history, 25 years. She does notes as well as she has been a real estate agent, as well as she has had this background in economics. So I'm going to let her introduce herself, and I'm just going to let her run with a completely different topic. So Kathleen Kramer, 5 possible disruptors in 2022. Hi, honey. Welcome.
Hey, how are you? It's great to be back, Christina. I was on a couple months ago, and we had a great conversation. And we talked all about, big wins and big losses and how we overcame those things.
Yeah.
So today, as you mentioned, today will be just a little bit different because I think when you get to the bottom line, there's always opportunity in real estate, no matter what the economy is doing. As long as you can identify where those opportunities lie and what part of the cycle that we're in, then I think that there's always a deal to be done. And I'm a deal person. I really like to do real estate deals. And so just a little bit about me for those of you who may not be familiar with my name. So I've been in the business, as Christina said, for over 25 years. I started as a mortgage loan officer, as an originated a couple thousand loans for almost $1 billion in business in my previous life. And then after the financial crisis in 2008, I decided that lending, I was kind of done with lending for a little while, and I used my broker's license in California to sell apartment buildings. So I transitioned, and for 5 years, I did multifamily transactions with apartments. In the meantime, my husband and I built a portfolio of rental property. We've invested in syndications. We've done notes. Obviously, I was in the loan business. So right now, what I do in real estate is I'm a CFO for a company that buys and sells debt. We buy non-performing second mortgages. We work most of those out with the borrowers, help them stay in their home. That's our goal. And then we take those, get them to reperform. The borrowers are paying again. The loans are worth more. So then we can sell those loans at a profit. And so that is the business that we're in real estate. It's a little bit different than just flipping houses. We're flipping loans.
Right.
So wrap your mind around that for a minute. I also have a degree in economics from UC Santa Barbara. Go Gauchos.
See, there you go. I forgot about the degree in economics. I knew that you had a strong economic background, but I couldn't remember.
I do. So I could draw you a supply and demand curve if you really wanted me to. I won't. I'll save you. I'll spare you the pain and the suffering and the boredom of that. But I am familiar with the graph behind the economics, and really it's about supply and demand, isn't it?
Always.
So that kind of leads me to these 5 disruptors, because a lot of people right now are really worried, and they should be, about the future of the real estate market. We've had such an incredible year, 17.5% appreciation across the country, with some areas doing better than others. But really high double digit, appreciation is the outlier. This is not the norm. And we could expect to see that slow down, not crash. I am not predicting a crash because I think that the Fed has got themselves kind of in a corner They can't, we have 1.3% GDP right now. It was 6% last year. They should have been tightening last year. They had an opportunity, but they didn't take it. Instead, the federal government put through a big spending plan, which just exacerbated the inflation, right? So we have 7.5% inflation. We have 1.3% GDP growth. So how do you tamper inflation without killing GDP? It's a really tight box that they've got themselves in. And they also have to be careful not to create a huge asset revaluation in the stock market. Even though they say that's not their goal, they're not going to be very popular, and the current administration won't get reelected if everyone's 401k goes in half, right?
I don't see how they're not going to have that happen. So please continue. I want to hear
exactly. Well, and so this is true. So how do I protect my assets, my money from inflation? Well, I get into hard assets, and that's real estate. Okay. Right. Still a great time to buy real estate. But the question people should be asking is, what kind of real estate and how do I get in? Which leads me to the 5 disruptors. So perfect. For that, I am actually got some slides. This is part of a presentation. Do you want to tell them, well, I get the slideshow going. Why don't you tell them how to see the first half of what we did last night?
Exactly. So Kathleen Kramer was kind enough to come to my Phoebe Pasadena, FIBI Pasadena.com. Many of you guys know the existence of that meeting. A lot of the people, presenters I have here on my Real Estate Breakthrough Show are people who have presented at one of my 2 meetings, or I have met through meetings. So I asked Kathleen to actually put together a whole slide deck for last night for the presentation. And then I asked if she would present it here to you guys, so we would have it memorialized both on the For Investor, By Investor. So FIBI Pasadena.com will take you to Kathleen's full presentation. By the time we release this as an REB show, we will also have released that full presentation. So go to FIBI Pasadena.com or YouTube, FIBI Pasadena on YouTube, and the Kathleen's full presentation on the economic backgrounds behind the 5 disruptors will be there. But as Kathleen said so wisely, there are many of us who are hobbyists, maybe not professional economics, as Kathleen is trained in it, but I'm not, who are out there with our opinions on this hyperinflation type market, whether it's going to be inflation, stagflation, lots of people out there. But Kathleen was kind enough to put forward her 5 possibilities of how you can actually use these disruptors. So rather than being gloom and doom, I want you to hear what Kathleen has to say as possibilities. So go.
Okay, that's great. Thank you. That was perfect. So basically the concept behind these 5 ideas are, how can different various investors engage with the current circumstances in order to continue to make money in real estate? Okay, so I'm going to start with government regulation, because this is the big, elephant in the room. And almost everything that's going on right now is being driven by government policy. Okay, the free market is not as free as it used to be. So we really, instead of complaining about it and being sad about it and sitting on the sidelines on our hands, what we need to do is embrace the change, understand what the government is offering, because they are incentivizing right now like crazy. So the bill that got pushed through, the infrastructure bill that got passed through last year, has almost $1 billion, half a billion dollars worth of incentives for low cost housing. So how do we embrace that? Okay, so in California, the way that this is going to look is it's going to look at infill projects and higher density, even in single family residential neighborhoods. So being from Orange County, California, I'll just give you an example. In California, what you can do now is, if you have a lot, a single family zoned lot, you will be able now to split that lot into 2 pieces, and you will be able to put 2 units on each one of those pieces, and then you will be able to sell those pieces individually. Now, this is huge opportunity. Now, think about the size of the home. If you're replacing a single family home on a 6,000 square foot lot, now you have 2 3,000 square foot lots. You're going to need to have fairly small homes on those lots, right? But it'll be higher density, and this is the government's idea of a good solution. Okay. You don't have to agree with it. All right. I'm just saying. All right.
But it is what they put out. So here we go.
It's what they put out. Right. So, and there are so many different, applications of this in federal and state budgets. So almost any state of the country that you're in, What you need to do is go and dig into these new incentives that are coming along, just like those of us who took advantage of the opportunity zones, right? That was legislation through the tax code that helped us invest and move some of our money, into the inner cities and create positive change, right? So it's just a different incentive framework. And so embrace it, get in there. If you're thinking California, if you're thinking multifamily or rental property, if you're scared about a recession, if you're scared about eviction moratorium, if you're scared about rent relief moratorium, maybe you should look at government subsidized housing. The government always pays. The government paid for Section 8 housing. We call it Section 8 in California. It's different in every state. But the government pays on time. Okay. So even if your tenant can't pay, the government's going to pay. So if you're that scared about a recession or about the valuation of your property going down, why don't you get involved in something that is paid for by the government, because they are going to be paying more and more, it looks like, for people's housing. So there's just a couple of ideas on the government regulation changes. All right.
Perfect.
Moving on to number 3, if you didn't notice. I'll get to number 2 in a minute.
Yeah, I noticed.
To keep you awake. Okay.
Here we go. From 1 to 3. All right. Perfect.
I didn't notice that. I think maybe I deleted a slide. Okay. So here's how this one goes. So supply chain onshoring. Okay. It's no secret that now China and manufacturing in China is problematic, right? We discovered that. We knew that before, but it became very apparent during the crisis, COVID. And even just for the Olympics, they shut down one of their major ports, which delayed our goods and products from coming over even further, which is exacerbating our inflationary situation. So how is this going to be resolved in the longer term? That's the question that I was asking myself to think about this one.
Yeah.
So already ships that have been parked off of Long Beach and the Southern California coastline have been rerouted to Houston and East Coast ports. Okay. Right. So you're talking about Virginia, you're talking about Georgia, you're talking about South Carolina, you're talking about Florida and Texas. And so as an investor, if I'm looking at a long-term picture, I'm thinking, okay, if we are actually going to be bringing more ships in and we're looking for areas where it will be easier to land our ships because of the regulations in California, which prevent a lot of truckers from operating here. I'll get into that in a minute. I'm looking at the expansion of the ports in the South and the East.
Right.
I'm also thinking that manufacturing is getting onshoring and a lot of those jobs are coming back, but there'll be robotic jobs and how to maintain the robots that are doing the manufacturing jobs. But all of this has to happen in a facility, right?
Yes.
So industrial, huge growth opportunity right now, especially around the ports and the ports that are growing. Maybe not so much the Port of Los Angeles, sadly,
no,
because the emission standards for trucks in California are so tight that many trucking companies just gave up on the state. This is part of the problem with getting the stuff off of the ships in Los Angeles and getting it to Arizona, getting it to Nevada and onto the 10 freeway, right? So if we think about how the government is impacting, that's another growth opportunity that you can get invested in. Now that to buy a warehouse, property is probably an advanced investor or an investor that goes into a pooled investment like a syndication,
yep.
Right?
Yep.
So, but all of these new growth requires jobs and it requires people who have to live in houses and condos and townhomes. So another growth area to look at if you're thinking of investing in parts of the country and what parts of the country are good to invest in, that would give you an indication. So look at those port cities and where do the bedroom communities lie and where's the path of growth.
And if I may, I am going to jump in here for a minute.
Yeah.
So one of the things, I was just talking with somebody who runs an Amazon business. And so therefore they're very reliant upon distribution because effectively that's what the value is of buying something over Amazon versus buying it at your local hardware store because he sells hardware goods, right? And one of the conversations he had was the the Port of Los Angeles is so backed up that the freighters aren't even leaving until they know there's space for them to land. Right. So now that's a disruptor in the supply chain. And we care about that because now they need to go to a different port. Right. So now it's like, gee, I ordered these goods, but now they can't come in through a Los Angeles. How do I reroute them? Because I don't have control over the whole ship. I only have control over my container, right? Over what I ordered. So how do I reroute the container? Can I do that? So he's busy sorting that out, doing all kinds of calculations on losses of sales, given he doesn't have the goods, but what does it take to be able to move that container from where it's sitting in the port, not even in America, right? In the port across the ocean, waiting for a slot to show up here, right? He's like, well, what are all those losses? He's still better to wait for it to show up in his business model. Every time he tries to calculate moving it to another port, that's a shorter term effect. Now, for those people going, well, no, that's a short term effect. COVID and the supply and the port being backed up, that's short term. But Kathleen said something really important. The Los Angeles Harbor has changed its requirements more around about the green and about being able to have trucks move in and out. And the way they control that port is a long-term disruptor, which is why other ports in other states are very likely to continue to grow. So I just want to differentiate the short-term disruptor from the long-term disruptor. And of course, then there's the chain you described. More containers coming into that port means more workers means more housing means more coffee and food and bank accounts and more children and more elementary schools. And so as that grows, then so do the towns and the facilities of that town. So that's why industrial as well as single family or residential. Just to highlight what you just said. Continue.
That's right.
Hey,
so
we have 2 3s, by the way.
I know we have 2 3s. See that? I was saying that's like now I had 1 3 3. So, I am teaching my daughter 7th grade math, but forgive me. 1 3. Okay. Anyways, so I made a mistake. Yay. Okay. Yeah. So consumer distress. Okay. So, the number one question I think that I get from investors is, will we have another valuation crash in single family?
Yes.
Because they're just scared out of their mind, right? We've had this huge
I get that
run
question
up
all the time. Yep.
So on and so forth. Okay. So if you want the whole background on my answer or my belief, my hypothesis is the answer is no, we will not have a huge crash. And if you want the background, then look up the Phoebe recording, right? Go join Phoebe and go listen to the recording, because we go through a ton of slides on, forbearances and foreclosures and all that kind of stuff. So
yes.
However, we may have a crash in consumer confidence. Why? Because the policies of our current government are heading us towards $7 a gallon gas. Think about that for a minute. How many people are going to want to buy houses to purchase, to own at $7 a gallon gas? Okay. Now that's pretty, I'm being a little bit on the edge right here. Okay. Got my tinfoil hat on. However, you have to just look at geopolitically what's going on, and you look at the initiatives in Congress, you look at what they're trying to get through. All of these things are limiting oil production. When that happens, that drives the inflation, that's driving the inflation. So what happens if, so this is really interesting, right? So we know that home builders are still incredibly bullish. Why are they bullish? Because Wall Street is putting billions of dollars into buying build to rent and building communities for pure rental. The homeowner, the individual owner buyer, may lose confidence, or the homeowner might lose their job if we go into a recession here, which I think we probably will with the Fed action coming. We go into recession, homeowners start to lose it, some of them, not all of them. Not everyone in the same neighborhood, not all at the same time, like it was in 2008, but one by one. So this creates opportunity if you learn as an individual investor, a small investor, if you learn how to put deals together creatively to solve problems, there is a spot for you to knock on doors, literally and figuratively, to find distressed situations one at a time, and work out solutions that are win-win. You help the homeowner get out of a situation they can't sustain, You walk into a situation where you can make a profit, hopefully a reasonable one, and make something better, right? And this is how people like Bruce Norris, if you know who that is, Bill Tan, if you know who that is, Christina Suter, if you know who that is, Kathleen Kramer, solving problems. This is how you make money, being a benefit to society by filling a need and solving a problem. So, work on those divorce attorney networking groups, the bankruptcy attorney networking groups, hoarder homes. We have some people that specialize in those kinds of pathologies that can help people out of those situations. That's another opportunity in the market coming, because anytime there is economic change, there is transition and there is distress, and there's opportunity in the distress.
Yeah.
So this is the slide about psychology. I just went through that. So a short spike in interest rates and in REOs might cause the buyer psychology to shift, and then that could open up more opportunities. But I don't think we're going to have a wholesale crash across the board like we saw in 2008. So don't sit around waiting for that to happen.
One of the statistics I've seen, I'll jump in, but keep it short. One of the statistics I've seen is it takes over 12%, it's between 12 to 18% of the current market for sale to be REOs in order to start seeing a strong downturn in price points. So it's somewhere in that ratio, 12 to 18% of houses that are available for sale need to be bank owned. That's when you start seeing this sort of downward spiral. And you cover this earlier in the presentation on the Phoebe Pasadena. I wish we could do the whole thing. We don't have the time to do the whole thing today. But you cover this earlier, which has to do with, being able to have solid lending underneath our existing real estate lending practices mean we're not very likely to see 12 to 18% of REOs, given the solid and tight lending structures that are underneath the existing homes. So continue.
One last point on that thought, okay, because this is really a critical piece that I think a lot of the forecasters are getting wrong. Wall Street is a big real estate owner right now. They've gone in big, BlackRock, and we know that the big investment firms basically run the government, okay? So if you believe in that premise, which they do through their donations, okay, and the relationships.
Yeah.
Real estate is a protected class. Think about that now. There's enough money from the big Wall Street folks in real estate that single family rental market especially is now going to be a protected class. How do we know that? Look at the forbearance programs they put in COVID.
Okay.
They didn't allow those loans to go to foreclosure. We would have had a washout like we did in 06 and 07 and 08, but we didn't. Why? Because they put the forbearance plan and it worked wonderfully. I think it's one of the most successful government programs we've had in forever.
Okay. Very good.
Okay. So let's shift gears now and talk about number 4. So we get through all 5. Okay.
We're going to talk about pigs flying later. Go ahead.
I think this is really exciting. If you're a builder, if you have the inclination to be a builder, look into 3D printing and alternative factory built housing methods. We have been building houses the same way for 150 years. Okay. And that is changing. And there's a 3D printed community in Rancho Mirage that's coming online, and they're able to deliver a 1,450 square foot house with a profit for under $600,000, which is, believe me, is a discount in California.
Yes, it is.
However, the opportunity here is that for a short period of time, maybe the next 3 to 5 years, until this is more widely adopted, there will be an opportunity to build under the cost of your competitor.
Okay.
If you let that sink in and you're willing to do the work to get into the business and learn the business, this is an amazing opportunity. Let's move on.
Or to align with somebody who's already in the business.
Or align with somebody in the
business.
Invest in them. Yes. Look at the numbers.
Look at the numbers, but invest in them or work alongside them. Right. If you have the land, work alongside them. Okay, go ahead. Continue.
Right. Exactly. So, the next thing, this is for syndicators. Okay. Because we have our first use case of creating an NFT or a coin, if you will, just to use a very generic term, to use in a real estate syndication. And it was this group out of Florida. They bought a big project. It was, multi-million-dollar project, I think 20 or 30 million. what they did is they did their typical Reg D syndication off of it, right? Accredited investors only, $50,000 to $100,000 investment. And you're like, gosh, Kathleen, where's the opportunity? Well, here's where it is. They kept 10% of the membership units of that syndication, and they tokenized them. They created a coin, which can then be listed on a brokerage, like a Coinbase, all right, or crypto.com kind of brokerage, where people can buy a fractional unit of those membership units and say you can get in for $5,000 or $10,000. What this could do is democratize investment in these types of properties, which have been prohibited for so many people. They can't get into it until they can meet that accreditation threshold. Now, the SEC is scheduled, they're looking at all of this and they're scheduled to rule on it sometime in 2022. But if they allow non-accredited investors to be involved in these tokens, then I think this is an enormous influx of capital that has been restricted that can get into multifamily, industrial, all of your higher commercial type projects, which it's a huge game changer. It makes me very excited. It gets me out of bed in the morning, keeps me up at night because I'm thinking about the opportunity available in it. And I think creating a market to trade these types of tokens is phenomenal. So this is another growth area that I'm super excited about. No comment? Okay, we're both excited.
I'm gonna let it go. I'm gonna let it go because I know our time.
Okay. Finally, I think that if there's still investors out there who have not read the book, The Fourth Turning, or heard of Neil Howe, what they need to do is they need to Google Neil Howe and Real Vision and look up this 1-hour interview that Real Vision did on their platform with Neil Howe. Neil Howe wrote this book called The Fourth Turning and it explains a lot of the changes that we're seeing in our society and in our governments right now. If you haven't read about it, I think it will help you make sense of some of the changes that we already see happening and maybe come to understand a little bit about what is likely to be in the future. I have one more piece of advice. If you haven't put ESG and carbon trading and carbon credits on your radar, now would be a good time for you to read about it. This is something that is coming. Our current administration is pushing for this. This is the Build Back Better. This is the Green New Deal. But this is bringing what's already happening with carbon credits and carbon trading in Europe to the United States. It's already in Canada. It's already in Europe. The elite, the owners of the mass, the bases of production, really the BlackRocks, the Vanguards, the Rockefellers, the Rothschilds, the global elite are all in on this. So to think that we're going to be able to stop it is probably a false belief. So why not look at it, understand what it is and what it isn't, and then build your long-term portfolio, because it's still 10 or 15 years away, but build your long-term portfolio around this. Now, there's a reason that Bill Gates is the #1 owner of farmland in the United States. Okay, he has a purpose. He's a big investor in pharma, and he's a big investor in farmland. So what you can do to learn more, they've written all their plans out. There's formulas in there. Now, how does this relate to real estate? Well, if I have to offset the carbon footprint of every building that I build in the future, how is that going to affect the cost of construction? It's going to go up, right?
Yeah, it's going to increase.
It can only add, right? And as real estate investors, we know that if we can buy property at or below replacement costs, we're buying it right, right?
Right.
So think about this now. If you can buy your portfolio, if you can buy into your properties now before these taxes get added on, before the regulations are put into effect, which they will eventually,
right?
Because the big corporations have already made a commitment to net zero. So how do I get to net zero as a real estate investor? These are the questions that you need to be adding into your calculations. And a good place to do that would be to go to the World Economic Forum. You can Google them.
Right.
They have a publication called the Glasgow Financial Alliance for Net Zero. We talked about net zero. And you should also look up their agenda for the world for 2030 and 2050.
Yeah.
Because even if we get a different administration in 22 and 24, some of these changes are coming. They're coming eventually anyways. There's only so far that it can be put off. So I just say this is a disruptor. So you need to think about it and start thinking about it and putting it into your long range plans. This is long range. This is not tomorrow. This is 10, 15 years. But you look at the price of gasoline in Europe.
I don't know.
And then you look at the United States and what the administration is doing to the price of oil and gasoline, and that's driving our inflation. And if they're talking about $150 a barrel oil, which they're talking about, especially with Russia and Ukraine going at it,
right,
you start to put the pieces of the puzzle together. And by educating yourself, I think that is something you owe to yourself as an investor and your children, because a lot of us are building our portfolios for our kids, right?
Yes.
So think about where that's leading and try to build that into your equations as an investor. Okay.
Yeah.
I think I'm out of time.
you are officially out of time, as much for yourself as for me. And I guess the only thing I would add is that people don't understand there is this whole economics that rises and falls behind, but these guys are the deal makers that will continue to exist in family funds, family organizations that have these philosophies that will be driving these agendas, political, I don't want to call it politicals, but this sort of geopolitical.
Social.
Social. These social agendas will continue to be driven through underneath our political system, because these family funds aren't going to go away, and they're not going to necessarily change their agenda or their point of view for the next 30 to 50 years, which is why they can create these plans. So it's amazing that you brought this in, because that's the big brother of Big Brother. I'm just saying.
You know what? And look, I'm not making a value judgment. I'm not here to make a value judgment one way or the other.
You're noting what's happening, and therefore
I'm reporting
what's happening.
Yes,
right.
I'm reporting on what I'm seeing, and I think it's a bad philosophy to put your head in the sand and wish it would go away.
or to continue to argue with it because you believe it's the wrong direction to go. And so therefore ignore it or withdraw from it and just discount it. Oh, well, that's just not going to, and it's like, yeah, but if there is enough power, which there is behind some of these, reformation plans and social agendas, you really do want to at least acknowledge what is it going to do? How is it going to possibly affect, even if I don't think it's going to run as deep as they're hoping it will, it's still going to affect what I'm doing and what I'm up to. So I agree with you. Putting your head in the sand or having a stance against it politically isn't going to necessarily help you be a better investor. Just a suggestion.
Exactly. And in closing, I'll just say,
yes,
kind of my prescription, find a way to buy under replacement costs. So whether that's a new technology, whether that is finding a distressed situation, whether that is taking advantage of government subsidies or government programs that give you the edge, find a way to buy under replacement costs. Finance on friendly terms and at reasonable leverages. Okay, this is where people lost it in 2008. They were over leveraged and they didn't have enough reserves. But real estate is a hard asset and it will move with inflation. It will protect your money and your retirement accounts against inflation, but please maintain a liquid reserve. Don't go all in. If we do see a correction, you want to have some dry powder so that you don't miss the bottom, right? Again, I'm not marketing anything. I'm not selling anything. I'm not representing people in transactions. I'm only trading for my own portfolio right now. But if you want, you can follow me on LinkedIn. It's at Kathleen M. Kramer on LinkedIn. And I posted my email address, but I don't check my email all that much anymore. Not that one anyways, because I'm not customer facing. I'm running our own finances and handling my husband's businesses and so on. So at any rate, but I really appreciate you, Christina. You have a fantastic club. If people haven't been to your club meetings, they should start attending. I know that there's a handful of heroes in the business, and you certainly are one of them. Oh. And with the consulting that you do and helping people to figure out how their vision should align with their investments,
Yeah.
I can't recommend your services more highly. So thank you for having me and for listening to my crazy, wild tinfoil hat ideas.
No, I love it, Kathleen. That's why I begged you to be here. Literally, I was teasing last night about how I begged you to be here. And I appreciate you taking the time from your incredibly busy schedule, your family needs, your business needs, and to apply your bright brain, right, one more time to economics and letting me get from you what your seeds are for 2022. I will probably be begging you in 2023, and you'll probably still be saying, Christina, you don't understand. Gotta wait, honey. But I just so appreciate the time and the focus and your intelligence and your diligence as a human being in trying to be able to navigate what can be very complicated seas. So thank you for being willing to give us these ideas. I am Christina Suter on Real Estate Breakthrough. Thank you so much for listening to the show. You can find us on YouTube. You can find us on Roku TV. Soon we're going to be on Amazon as well. And we're looking for, we have iTunes, iHeartRadio, and Spotify. You can find the Real Estate Breakthrough Show. And of course, you can find FIBI Pasadena, which is Kathleen's full presentation at fibipasadena.com, or go on YouTube. Thank you so much.